Turkey's gold industry is heating up. Good news for the Istanbul gold refinery, which produced 40 tons of the precious metal last year.
We are producing investment bars. We are preparing large bars for the banks. We are also supplying to the international bullion bankers.
While not directly involved with the gold for gas exchange, Turkey's banks are, and it is difficult to track exactly where these bars end up.
I think the United States has grasped that if they wish to sincerely force Iran to the negotiating table on this nuclear issue, they must shut down the door on Turkish gold trade, because this is one of the biggest leakages. If the trade is in dollars, euros, or any other currency, there are various means to trace them. But with gold, it's a different story. Gold is gold. There is no markings on it. We don't know what it is being used for.
According to the Turkish Statistics Agency, the country's gold exports reached $12 billion by October of 2012, a tenfold rise on the $1.2 billion a year earlier. While this has greatly helped Ankara reduce its obtrusive current account deficit and obtain an investment-grade credit rating, a first after nearly 20 years, Atilla Yeşilada says it completely inflates economic data.
So A, this trade bloats our growth figures. B, it exaggerates the decline in our current deficit. These are not only economic issues, but they're also very relevant market issues. One reason why the Turkish markets have rallied so rapidly last year, outperforming all of the emerging markets almost, is because of the sudden decline in our current account deficit.
Not being a huge gold-producing country, much of Turkey's supply is directly imported or from the country's huge gold reserves, estimated to be worth around $120 billion.
I think it's reasonable to demand that Iran buys goods and services made in Turkey rather than gold. That would be much more beneficial for the Turkish economy, and it would dispel any notions or question marks on what Iran might be doing with this money.
Ankara has already reduced its Iranian energy imports from 50% to 18%. However, with a decelerating economy, Turkey's need for cheap regional options continues. And despite possible alternatives, Iranian oil and gas prices remain about $6 per barrel below global averages.
With further sanctions on Iran possible, pressure is expected to grow on Turkey to lessen its energy dependence on them. But that process is timely and costly. There are also fears this could escalate already increasing tensions between the two countries, most notably over Syria. Natalie Carney for CCTV in Istanbul, Turkey.